Thank you for coming to our annual disability tax credit forum. We'll be talking shortly about disability tax credit and some of the other programs that can help people with disabilities. And I wanted to start off by acknowledging an appreciation that I'm speaking to you from New Westminster, BC, from the traditional and unceded territory of the Kakite First Nation and the Coast Salish peoples. And really appreciate you joining us today. Some of you are aware we've been doing these disability tax credit town halls for more than 10 years, and we've had thousands of people from New Westminster and Burnaby, and in fact, right across the country, benefit from these forums. We try to make sure that you get the information that the government actually doesn't put a lot of effort into getting to you. In fact, I think, and I'll mention this later, the government actually is not is trying to make sure people with disabilities don't get the information that they need, and that's why we do these seminars each and every year. We are going to be starting in a few minutes with the presentation. The presentation will take probably a little over half an hour. And at the same time, there will be people who will be sending questions. You can send questions to our host and moderators. That is Doris and Elodie, my part of my dynamic team. And you can send those questions in. And in the second half, we will answer as many of those questions as we can. And as always, you can reach my office both by email and by telephone during this pandemic. And so we'll make sure you have that information too if you have specific questions you want to ask a little bit later on. And I hope that you and your families are staying safe and healthy during this pandemic. We've helped thousands of people over the last year. And my staff have been really tireless of reaching out to people, and please don't hesitate. If you need our help, assistance with any federal issue, contact us. That's what I'm there for. That's what I'm entrusted to do, is to follow up and to see with any federal issue that we are giving you the best possible service. During the pandemic, we've been fighting for emergency benefits, including emergency benefits for people with disabilities. The federal government has given a partial benefit out to people with disabilities, but only for those who've benefited for a certain number of federal programs. And Jagmeet Singh, our national leader, and myself, we are pushing that disability benefit go to all people with disabilities. As well, I'd like to say that what we are talking about today, this afternoon, is the disability tax credit, but I'm also pushing and have legislation to make the disability tax credit a refundable tax credit. That would then apply to everybody with disabilities, and so that's part of the work that I'm doing in the House of Commons. People with disabilities in our community have told me the disability tax credit would be a lot more effective if it really went out to everybody, was no longer non-refundable but was refundable. So I'm fighting on that issue. We're fighting to expand disability supports, and we've been fighting for a variety of benefits for small businesses and supports for individuals and families as well. That's our responsibility. We certainly hope that you are staying safe and healthy. And so we will be letting in a few more people, and then we'll be starting with the presentation. Again, if you want to ask a question, you can go in the chat box and ask that question. And I also wanted to thank Liz and Alyssa, who are our American Sign Language interpreters. Thank you for being here today so that members of the deaf community also can access this important information. So, without further ado now, we're going to go to the presentation. So you'll see a split screen. You will see our interpreters. You'll see the presentation, and you will hear me as well. Elodie, if we can bring up the first, and we're splitting the screen, I think, with the ASL interpreter as well. So the reason why we do these disability tax credit seminars now for more than 10 years is because the majority of people who could benefit from the disability tax credit don't actually know about it. The federal government has stopped all the programs. This was under the former Prime Minister, Mr. Harper. Mr. Trudeau has continued this, sadly. And so there's no information being made available to people with disabilities across the country. And so we do this every year, and every year, as you can see, we've got 100 people here today. Every year we get 100, sometimes more, people that come, and as a result of it, often they're able to get retroactively money, sometimes as much as $13,000. So here's my good friend George, who passed away a couple of years ago, but he talked about how important it was. He came out to the forum just to find out. He was kind of curious. He didn't realize that the federal government owed him $13,000. And so he wrote me this very nice note saying, thank you so much for caring and thanks for putting on these seminars. George is not the only one that's gotten up to $13,000 because it's retroactive. And so that's why we keep doing this every year. It means thousands of dollars coming back to our communities of New Westminster and Burnaby. And it means that people have more money in their pocket. And don't forget, this is money the federal government already owes you. They have just not given you the information so you can get that money back. So we're going to talk now about what you need to get the disability tax credit, how you're eligible. Thank you, Elodie. So you'd be eligible for the disability tax credit if a qualified practitioner, and we'll come back to that in a moment, says that you have any of the following: that you're blind, or that you have a severe and prolonged impairment in a physical or mental function that markedly restricts your ability to perform a basic activity of daily living. And that's a lot of words, but we will break these things down so you know exactly what we're saying. Or you could qualify if you have significant restrictions in 2 or more activities of daily living, or you have need for life-sustaining therapy. So that's the overview of what it takes to qualify. Let's go into each of these details. So next slide, please, Elodie. So what are the basic activities of daily living? Well, the basic activities of daily living are the things that you do every day. So speaking, for example, feeding and eating, hearing, and making sure, of course, that you can communicate through hearing and speaking, dressing yourself, walking, mental functions necessary for everyday life. Mental functions can include everything from making sure that you have the ability to do financial transactions to memory. And so for things like Alzheimer's, mental functions these are the kinds of things that qualify people for the disability tax credit. And elimination, bowel or bladder functions. George, that you saw at the beginning of the presentation, actually had a bowel disability, a bowel function disability. And that's why he was able to qualify for the disability tax credit. The next slide, please. So that's for markedly restricted, and here's a lot of what we call a word salad from Revenue Canada, just putting all these words together. But basically the words come up to the very simple, that if you're unable to perform any of those activities that we've just talked about, for example, dressing or walking, mental functions necessary for everyday life, bowel functions, feeding. If you're unable to perform those, you're considered disabled. Or if it takes more time than it would with somebody without that disability, and normally that's the rule of thumb for Revenue Canada is 3 times longer than somebody without the disability. So somebody of the same age, if it takes you 3 times longer to walk those steps, dress yourself, those are the things that qualify you for the disability tax credit. And my father, who is 98, in his case, that ability to dress himself is far longer than it would be without the disability, so he qualifies. Next slide, please. But even if you don't have that 3 times longer than somebody without the disability, if there are a number of areas where you are slower than somebody without a disability, and let's talk about feeding, dressing, walking. If you don't meet that first criteria for one activity, and you've got a number of areas where you're slower than somebody without the disability or unable to do it completely, that still adds up to you qualifying for the disability tax credit. Next slide, please. And I mentioned earlier life-sustaining therapy. That can be things such as kidney dialysis or lung therapy. If you do that at least 3 times a week for an average of at least 14 hours per week, you would qualify for the disability tax credit. And we're talking about an impairment that is something that lasts at least a year. So if the doctor says, yes, you're going to have this disability for at least a year, or if you've had it for at least a year and it continues, then you qualify. Short-term disabilities, for example, after a car accident for 3 or 4 months, that would not qualify you for the disability tax credit. Next slide, please. So I mentioned earlier, there are practitioners who can actually sign off. And here are the list of practitioners. For medical doctors, your doctor can sign off for all disabilities. An optometrist can sign off for vision. An audiologist can sign off for hearing. My wife, Lee May, is an audiologist, and sometimes she signs these forms. For occupational therapists, for activities of daily living like walking, feeding, dressing, they can sign off. Psychologists and psychiatrists for mental functions, they can sign off. A speech language pathologist for speaking. Physiotherapists for walking. In short, you need to have a qualified physician or one of those healthcare professionals signing off. So you may be tempted to say, well, I've got these symptoms, Peter, what do I qualify? And I can't say. I'm not a doctor. I can't give you a diagnosis. You really have to go to see your doctor or your other qualified practitioner, and they're the only ones that can sign the forms. So don't ask me, ask them. And the forms that you bring then start the process for getting the disability tax credit. Next slide, please, Elodie. So that form is called the T2201. You can get it on the Revenue Canada website or by contacting my office. It's called the Disability Tax Credit Certificate. It includes that you need to have your qualified practitioner, for example, your doctor, signing it, and make sure that they write their phone number and their contact information legibly so that Revenue Canada can follow up and just confirm that a physician, a doctor, actually signed the form. And do it now. I talked earlier about George. We can send in these forms to the tax center any time of the year. But if you've been disabled for more than 10 years, you can only go back 10 years for your refund. And my friend George that you saw at the beginning of the presentation, he didn't send his form in immediately. He ended up losing a year of eligibility. So you can submit that form to the tax center at any time during the year, or you can let us know and we can submit it for you. But you have to take the form to your doctor or to another qualified practitioner. They have to sign off on this form. Next slide, please, Elodie. So if there's a problem and it's not approved, let us know and we'll follow up. It could well be something as minor as your doctor forgetting to sign the form. Sometimes we have to file a formal objection. Revenue Canada sometimes tries to test you by rejecting, but My point is this: if they've rejected you, it doesn't mean the end of it. We have engaged and fought Revenue Canada numerous times and had them reverse their position quite often. So even if you submit the form and the doctors and the Revenue Canada says no, it's not the end of the story. That's my point. Next slide, please, Elodie. So the prior years can be adjusted after you're approved, right? So Revenue Canada approves you. In the case of George, they went back 10 years. You can go back 10 years for that. And we have a form called a T1 adjustment request that it's our pleasure for us to send that in or make sure that it's available to you. You need to sign one for each year. And then they reassess your tax return and send back the money. And normally, when you are approved by Revenue Canada and the disability is permanent, you don't have to worry about going back and being reevaluated. That happens very rarely, and the government normally should accepting the approval of the form is accepting that you have a permanent disability. Next slide, please. So if you can't use the full disability amount, and this is what I mentioned earlier, the difference between a refundable tax credit and a non-refundable tax credit. A refundable tax credit means it goes to you even if you don't have the ability to pay taxes or you don't pay taxes. For a non-refundable tax credit, it only reduces your income tax to be paid or gives you a refund on your income tax paid. But so that's the bad news. It's still non-refundable. We're trying to force the government to make it refundable. But the good news is you can actually transfer the amount to your spouse or common law partner. They can claim that unused amount or another supportive person who may be able to claim that same amount as well. Now, the supportive person needs to be somebody who lives under your roof. Generally speaking, Revenue Canada approves it. It could be your father, your mother, it could be your son or your daughter, but you need to live under the same roof to be able to transfer that amount from yourself, if you're not paying income tax, to that person who does pay income tax in your family, so that your family can benefit from the disability tax credit. And next slide, please. So that is the overall disability tax credit. First, you need to go see your doctor. And from there, you can apply to get the tax credit back retroactively as far back as 10 years or to the date that you became disabled, whatever is the most recent. And at the same time, you can transfer amounts to members of your family. Now, the disability tax credit also has another component, and that is a number of other programs that are very helpful for people with disabilities. So I wanted to talk briefly about the Registered Disability Savings Plan. And this is for people with disabilities to save for the longer term. And essentially, these are contributions that can be made to a family and paid into this Registered Disability Savings Plan. But there's also a significant incentive, significant money coming from the federal government. So my first point is this: once you qualify for the disability tax credit, you can go to your bank and financial institution, talk to them about the Registered Disability Savings Plan. Check a couple of institutions out. Not all credit unions know about this RDSP, and not all banks do either. So I would get somebody who actually knows about the program and is willing to go to bat to make sure that you get every dollar in contribution that the federal government has set aside for you. So once you set up the account, your family can start making these contributions. But here's the most important thing, and I'll ask Elodie to change the slide. There are two federal programs designed to supplement the funds in the RDSP, the Canada Disability Savings Grants and Canada Disability Savings Bonds. Now, these are what really make a difference in terms of the financial security of a person with a disability. Next slide, please, Elodie. So the Canada Disability Savings Grant is a matching grant of 100% or 200% or 300%, depending on the beneficiary's family income and the amount contributed. So if you have family members, for example, giving $1,000 a year to your RDSP, you could see the government, depending on your income level, giving you up to $3,000 a year. And the RDSP can receive these matching grants up to $3,500 in any 1 year and up to $70,000 for the beneficiary's lifetime. That's over 20 years. That's a really exceptional amount of money. And when you think of, on top of that, that there are income that would come from interest, you can see that it can build up a very healthy nest egg for people with disabilities, particularly young adults who have disabilities, or if you know a member of your family or yourself, you're in your late teens and you open this up, you can actually build up a sizable income, a nest egg for your future financial security. Now, the grant can be paid up until the age of 49 years old. That's the downside. We are pushing that be raised to a higher age level. For the moment, the same government that gave $750 billion to the banks a few months ago, is unwilling to provide these supports for people with disabilities beyond 49 years of age. But we'll keep pushing, and hopefully we will get there. For the moment, the way the program's structured, you can't get a grant beyond the age of 49. And Elodie, next page, please. And there's also the savings bond. So even if your family doesn't contribute any money, you're not able to, your family's not able to, for a low-income Canadian with disabilities, you can still get up to $1,000 a year. And the lifetime bond limit is $20,000. Again, there's that 49 years of age limit. But when you think $20,000 in grants, $70,000 in $20,000 in bonds and $70,000 in grants, you're talking about $90,000 from the federal government. This is why the federal government doesn't talk about this program. They don't want people to access it, but it can make a huge difference. And that's why we're telling you today, and spread the news about this. This is a little known program that can actually have a real impact on people's lives. Next slide, please, Elodie. So a whole range of people can open it, even if the beneficiary, the person with a disability, is a minor. Another person can open up, including an agency or an institution. So if you're an adult, you can open it up, but even if you're a minor, others can open it up for them. And this is important, again, for that long-term financial security of the person with the disability. Next slide, please. Now, you do have this hic that you have to repay grants if you withdraw them too early, up to 10 years before the withdrawal. The government has been reflecting on this and has tried to make some changes, and stay tuned. We may see some other changes in the next budget. But for the moment, you need to be thinking of this as more of a long-term thing, that all the grants and bonds that you receive should be fully invested for 10 years before you withdraw them. And of course, for any money in the RDSP, if a person with a disability passes on, the nest egg, which is in the RDSP, becomes part of their estate and is paid out to the beneficiary's estate. Next slide, please, Elodie. So that concludes the Registered Disability Savings Plan. Again, once you qualify for the disability tax credit, go to your financial institution, open the account, and then look to make sure that you're getting all of the grants and bonds that you deserve, that you qualify for. And that can be up to $90,000 and make a huge difference in the life of a person with a disability. Now, this next section is about medical expenses. And again, these are non-refundable credits. It's a more complicated formula, but I just want to make sure people are aware of some of the things that you can include in your tax return for medical expenses that can often make a difference in terms of the money you get back. First, what we normally think of is what you pay to a doctor or prescriptions, or payments for things like wheelchairs and crutches and artificial limbs. That's all true, and it's all listed on the CRA website under medical expenses. But next page, please, Elodie. There are other things. For example, if you're changing a van to transport a disabled individual, you can actually claim up to 20% of the cost. That can be a lot of money for a medical expense tax credit. And for example, additional costs for building or renovating a principal residence to make it more accessible for people with disabilities, that renovation as well can be claimed as a medical expense if it is intended for accessibility, not to make it as an expense just to increase the value of the dwelling, but really for accessibility. For example, what we see, the stairway elevators that go up and down that you often see advertised on television, those kinds of things that increase accessibility can be included as medical expenses, something that's not always well known. Next slide, please. There's also moving expenses. If you have to move to another place because your place is simply not accessible, you can claim up to $2,000 in moving expenses as a medical expense, something that a lot of people don't know about. That's why we're sharing it with you. Next slide. Things that aren't included are things like organic foods, cosmetic surgery, those kinds of things. One thing I would mention, though, even though organic foods is not included as a medical expense, if you have a gluten allergy and you have to pay an increased cost for gluten-free food, as long as you have a doctor's note attesting that you have a gluten allergy, that difference in the cost between regular food and gluten-free food, that can be included as medical expense. So that's important to note. Next slide, please. And attendant care. If you've got yourself or your spouse is in attendant care in a retirement home or a nursing home, those amounts as well can be claimed as medical expenses. Next slide, please. And that includes for things like food preparation, housekeeping services, laundry services, healthcare. Though all of these attendant care expenses that include your share of the salaries and wages paid for care in the nursing home or the retirement center, all of these things are important for medical expenses. Next slide, please. You can't claim rent or food or cleaning supplies or things that are not related to medical care, such as groundskeepers and maintenance staff, those kinds of things. But the attendant care, as I mentioned earlier, for including nursing costs and meals, those the service for meals, those are all things that can make a difference. Next slide, please. And you have to make sure that you are claiming the attendant care expenses for the period at where you're at home. If you travel, for example, in the South, people aren't traveling during this pandemic, but if you traveled there in the South, you wouldn't be able to claim attendant care expenses abroad during the same period. Next slide, please. And if you have to travel at least 40 kilometers to obtain medical services, not so much in New Westminster and Burnaby, but in other parts of the country, and there are specialist hospitals, for example, up the valley or in Kamloops or Kelowna. If you have to travel up to 40 kilometers, you can claim the transportation costs. You have to travel at least 80 kilometers. For example, there's a specialist at Abbotsford Hospital, and that can sometimes be 80 kilometers one way. You can claim your transportation expenses, accommodation, meals, and parking. Next slide, please. And to claim these expenses, the following criteria must be met. That substantially equivalent medical services were not available near your home. You took a reasonably direct traveling route. So, for example, leaving New Westminster, going to Hawaii, going to Abbotsford, that wouldn't be a reasonably direct traveling route. And it's reasonable for you to travel to that place for those medical services. For example, if there simply aren't specialists at RCH, Royal Columbian Hospital, or Burnaby Hospital, or Vancouver, and the specialist is in Abbotsford, Revenue Canada generally considers that legitimate, that you are traveling that distance to see that specialist. Next slide, please. And you can basically use the simplified method of claiming the flat rate per kilometer for British Columbia for the period in which the travel happened. And if you have any questions about that, you can certainly contact my office. We get a flat rate from the federal government from a month-to-month basis, and we can provide that to you if you want to. If you didn't realize you could claim those expenses and now want to retroactively review the travel that you did over that period, we can help you out. Next slide, please. So that's the medical expenses. Again, non-refundable. It's a more complicated structure. But the important thing to note is if you have to renovate a van for a person with disability, you can claim a portion of those amounts. If you have to move to get a more accessible house or have renovation costs to make your house more accessible, you can actually claim those amounts. So that's important to note. We want to make sure that you get every dollar back from the federal government that you qualify for, and that's why we provide this information. Now, this final section, before we open it up to questions, is a number of other programs that you should be aware of, just to know about if you or a member of your family has a disability. The first is the caregiver amount. If you maintain a dwelling where you and your dependent both live, that can be any member of your family, including brother, sister, niece, nephew, aunt, uncle, parent, or grandparent. Next slide, please. And this is a person, a dependent, who is dependent on you due to an impairment in physical or mental functions, or is 65 years of age or older. So you can claim that caregiver amount in that case. Next slide, please. There's also a disability supports deduction. You can claim attendant care expenses that allow you to go to school or earn income. Now, this is important because we just talked about the medical expenses. If you are using attendant care expenses, like a nurse and other types of support, to go to school or earn income, keep that aside from potentially those same attendant care expenses that you may have from living in a group home or in a long-term facility, because the tax treatment of the disability supports deductions is actually much better than it is for the medical expense deduction. So keep them separate and make sure that you are claiming them under the disability supports deduction. Next slide, please. There's also the refundable medical expense supplement, and this is refundable. So this is a case of somebody who has a low level of employment income and a high level of medical expenses or disability supports. And in this case, it's a refundable tax credit. So it's one of the two where, regardless of whether or not you pay income tax, if you qualify, you actually get money from the federal government. And it's an income tested credit. Something important to keep in mind: if you have low levels of employment or self-employment income and significant medical expenses or disability supports. Next slide, please. We also have the amount for an eligible dependent under 18 years of age, or for infirm dependents 18 years of age or older. It says here on the form, neither of them require the famous T2201, the DTC form. You just need a letter from the doctor, but I'd actually suggest you're better off getting the DTC for all these other programs that you could qualify for. It doesn't make sense just to limit qualification to these two programs. So they don't require a DTC, but generally speaking, I think you're better off if you can get the DTC to go with that, and then you can, of course, apply these credits or benefits on your income taxes. And there's also childcare expenses. There's no age limit for a dependent child for whom the disability amount can be claimed. So that's important to note. The next slide, please. We also have the working income tax benefit, and the working income tax benefit as well is another refundable tax credit. So if you are working and you have a disability and qualify for the DTC, the working income tax benefit can give you a credit even if you aren't actually paying income tax. And there's the child disability benefit, which is part of the Canada Child Tax Benefit, and that's for a child under age 18 who's eligible for the disability amount. And next page, please. And then there's a home buyer's amount. So if you're eligible for the disability amount, or if you buy a home for the benefit of a related person who is eligible for the disability amount, you don't have to be a first-time home buyer. You may have heard of the home buyer grant. This is something for a person with disability that can apply. You can apply for if you have a member of your family who is disabled a number of times, and it does make a difference. It's something that you can also use the home buyer's amount to deduct from your income tax, provided that you are looking for a home that is more accessible for a person with a disability. Next slide, please. And the home buyer's plan, as I mentioned, this allows you to do withdrawal from your RDSPs to buy or build a qualifying home. This, again, is something that you are able to access for a person with disabilities in a way that without a disability, you don't have as much access to. So the home buyer's plan is something to consider multiple times if you are looking at particularly a progressive disability that requires more accessibility in the home, and upgrading or buying a new home that's more accessible over that period. The home buyer's plan can still be an option for you. And next slide, please. Then there's a refund of the federal excise tax on gasoline. This is something that's small amounts, a few cents per liter, but over the course of a year, because it's regardless of the use of gasoline, for this form XE8, you can actually get some of your money back. Maybe it's $50, $60 a year, but that is all part of making sure that you get all of the things that you qualify for. So we mention it here. And we also talk about the rebate of the GST, HST payable on the purchase price that relates to the modification of the vehicle. That money would come back to you. Or a rebate of GST, HST paid in error on medical devices. These are all things that you need to consider to make sure that you're getting all of the money back that you are entitled to. And the final slide before we turn to your questions is a cartoon. It's a woman from Revenue Canada saying, "Revenue Canada again, having trouble completing your tax form? Well, not to worry. Simply pick up your phone and give one of our agents a call. That's all there is to it. Easy, you bet. So why wait? Call us now, get the information you need." And there, the person who phoned obviously is still waiting and passed away in the meantime, and a family member says, "Is it still busy?" That's the problem with Revenue Canada. They are not providing information. The government has not put the resources into Revenue Canada. And as I mentioned earlier, we're not getting information out that is so vitally important for people with disabilities. So the presentation I've just given is available through my office. If you want to get a copy, let us know and we'll send it to you. It's a presentation that was done before by Revenue Canada staff until the former Harper government and the Trudeau government has continued this practice, basically stopped any of these presentations in the community. So people in Revenue Canada were so upset that people with disabilities were not getting the information they needed, so they sent us this bootleg underground copy of what they use internally. So distribute it far and wide, and let your friends and family and anyone else that you want to let know, spread this information, because this is literally millions of dollars a year that is going unclaimed because people with disabilities and their families don't necessarily know about these programs or don't know how to access them. So my request to you is spread the news far and wide. Now that's the presentation. I'm going to go into questions now, but just wanted to make it clear for folks, if you stayed for the presentation and you want to log off, that's I don't consider that rude at all. People are busy. This is a pandemic. You have other things to be concerned about as well. If you want to contact my office, we will make sure, I think on the chat, we have information available about how to contact us. I think, and so we are getting people that are putting up notes, and we will make sure on the chat that we have both the email address and the phone number. If you want to get a copy of the presentation, we can make sure that you get it. If you have any questions, we'll certainly follow up. And if you want to log off, don't worry about that at all. Thank you very much. Doris just put that out. Thank you, Doris. Thank you, Elodie. So our phone number is 604-775-5707. And our email address, peter.julian.c1 for constituency 1 at parl.gc.ca. So log off if you want. I'm now going to answer some questions, and some of these questions I think have been answered through the presentation. I've been asked, can you appeal a refusal for the disability tax credit? And I did answer that earlier. Yes, you can. And in fact, let us know if you're in our riding that you are appealing that decision, and we will help you. If you're in another riding across the country, please let your MP know and insist that they help you with that. They have a responsibility. Members of Parliament, the NDP caucus, we assist people with disabilities regularly, and we make sure that the follow-up is done. So yes, you can qualify for a DTC refusal. There is also a question of if you qualify for a persons with disabilities designation provincially, do you qualify for the DTC? Not automatically. And so that's why we explain this process. The provincial qualification process and the federal qualification process are different. And so that's why we wanted to outline how to go through it federally so that you won't be lost in the process. So it's not automatic. Please follow these steps, and you start with going to see your practitioner with the T2201 form that I talked about earlier. Comment from Wayne Stetsky. I talked about good MPs a few months ago that assist people with disabilities. Wayne Stetsky is on, and thank you, Wayne, for tuning in. He was the Member of Parliament for Kootenay, Columbia, up in the Kootenays, and he was very responsive to people with disabilities, I can tell you. And I believe he's running for election in an election that will be held sometime this year, which is great. That would be good news for people in Kootenay, Columbia that have disabilities, because he was very responsive to those folks. So thank you, Wayne. Going on, we have some people who have shared their stories, and I appreciate that. We have from River Glen, thank you. What to do if your income is too low to pay taxes? Well, that's a good point. If your income is too low to pay taxes, That is why we are pushing in the NDP for the disability tax credit to be refundable. It would no longer be dependent on whether or not you pay taxes. But if in the current situation with it being non-refundable, as I mentioned, if your spouse pays taxes, if somebody else that provides supports to you who lives generally under the same roof pays taxes, you can transfer the credit to them. So that's what to do, River Glen. If your income is too low to pay taxes, you can still transfer it, but we're still fighting for it to become a refundable tax credit. Next question. From Talia, thank you. Looking into this for my 13-year-old daughter who's been diagnosed with autism. Does she qualify? And I unfortunately cannot answer any of those questions around diagnosis. It really is something you need to talk about. Take the T2201 and take it to your doctor. And that the doctor should be able to provide you with a good diagnosis, and they sign off the form. That starts the process. For your 13-year-old daughter, if the doctor does agree that you meet the criteria, or she meets the criteria around disability tax credit, this is a very good age to start to build up that nest egg with the registered disability savings plan. So it's not too early to start. And again, because of the interest income, because of the grants and the bonds, up to $90,000, we could be talking about a considerable amount of money in the longer term for your daughter's financial independence. Chris asks, are they going to change the application questions to make it fair for everyone on disability? That's a very good question, Chris. And I would say at this point, it is very, very much what should happen. We have pushed to the government on a number of things, including right now the discrimination for people who are deafened and hard of hearing, and how they can actually access the program. So we would like to see a real overhaul of the disability tax credit. We'd like to see it become refundable. That would make it far easier to actually support people with disabilities. From Clark Savage, thank you, Clark. If a disabled claimant is already low income, the DTC cannot be transferred to the family member looking after their welfare if that family member has a spouse. Is that true? Thank you for your question, Clark. If the family member has a spouse, well, as I mentioned earlier, if we're talking about people living under the same roof, for example, a son or a daughter, if the son or a daughter is married, that is not that wouldn't be relevant to actually getting the disability tax credit. So if that's what your question is suggesting, that wouldn't be true. It can be a mother or father. They can be married. It can be a son or daughter. They can be married. But the key element for Revenue Canada is living under the same roof. That's the most important thing. Thank you very much, Clark Savage, for your question. And so I'm going through. We've got about 8 minutes left, so I want to make sure that we're getting. We've had questions flooding in, and thank you so much for these questions that we are getting from. Well, from right across the province too. So far beyond New Westminster and Burnaby, we're all the way to Kootenay, Columbia, and even in the Okanagan. Linda asks, does doctor or specialist, do they charge for filling out the T2201? Yes, that is often the case. Linda, thank you for asking that question. It's a problem, and this is why the NDP believes in pushing for universal health care and universal pharmacare. We do see people that their doctor has the possibility of charging and will charge for filling out the form. So you've got two alternatives. One is to simply express to your doctor your financial situation. If you're unable to pay for that, I would suggest to the doctor and ask, can you give us a waiver on this, because I've got financial difficulties. The other possibility is to find a doctor who won't charge for it. And not all doctors do. There are numerous doctors that fill it out for free because they understand the importance of making sure that form and the disability tax credit is available to their patient who has a disability. So doctors can, specialists can, you can request that they waive it, or you can see another doctor or specialist, but unfortunately, sometimes we're seeing doctors actually charge for that amount. And from Bridget, we have, what if the medical doctor refuses to complete and sign if they feel that the applicant has to meet every single health issue? And thanks, Bridget. That's a good question. Again, for doctors, I cannot give the diagnosis. Only a medical doctor or another specialist can. So, if a medical doctor does not understand the form itself, it is possible for you to go see another doctor or specialist. In some cases, we've followed up with some doctors and explained to them the process as well. Sometimes that helps. Explaining it yourself, even bringing a copy of the presentation so that doctors understand what the criteria are and what the benefits are from having the disability tax credit. All of that can be an advantage for you in speaking with your doctor. So it's a good question. But if a doctor refuses, there's not a lot that you can do to change things around. I have from Peggy. Peggy asks, I was always approved for 10 years previously and turned 60 in 2020. So this is the question, I think, of going 10 years back. Normally, as I mentioned earlier, for somebody who is newly approved for the disability tax credit, you can only go 10 years back for or to the date of your disability for that retroactive payment. I mentioned George at the beginning. He got $13,000 because for 10 years, he had 10 years of qualifying for the disability tax credit without applying for the amount. And so you can only go 10 years back at this point for the criteria around the disability tax credit. And I'm just looking at some other, thank you very much. Doris has been very dedicated. She brings in the next batch of questions. We're answering as many as we can, but we've only got about 5 minutes left. So, and so I have a number of questions that are more specific to casework. And as I mentioned earlier, if you're a resident of New Westminster, Burnaby, please contact my office. If you if you don't know the name of your MP, let us know and we can tell you how to get in contact with them. And we have a number of comments that have been made. Dawn mentions people with ADHD who have qualified, and also people with ADHD who have been refused by the CRA. That's interesting, Dawn. I have not heard that. Normally speaking, again, if the qualified medical practitioners have said that the person qualifies for the disability tax credit, one thing that could mean why you see that discrepancy is that in some cases MPs are going to bat for their constituents, and so they're winning the appeal. And in other cases, CRA is refusing and there's been no follow-up from the MP. That is one possible reason why you see that discrepancy. And I asked from Manasvi, if I register for the RDSP, would that have an impact on immigration sponsorship? The issue around the RDSP, if you qualify, that is separate from any immigration qualification. that takes place. The RDSP is for people with disabilities. That's a program that is independent from the immigration system. So it should not make you ineligible in any way to sponsor a family member. And I think we have a last question as I go through this. And thank you very much for your terrific questions. And the last question is, in the case of a family member who is asked to resubmit their DTC, what should we do? And I guess my question back is, if the person has reached the end of where the doctor thought would be their period of having the disability, it's a normal outcome for CRA to then ask for a reassessment. If you're seeing a reassessment that clearly contradicts what your doctor already filed, get in touch with your MP, because what that may mean is that the CRA is just fishing to try to knock some people off the disability tax credit. That's not something we tolerate, and it's not something we accept. And of course, we will be pushing back if it's one of our constituents and your member of parliament in other ridings should be pushing back if it is them. So we're now coming up. We've only got about a minute left. So I just wanted to thank everybody for being on today. As I mentioned earlier, and you saw our contact information, please contact our office if you want a copy of the presentation. It's our pleasure to send that out. But spread the word. Make sure people with disabilities are aware of it. There had 100 people on today, and we want to make sure that every person with a disability in this country has the access to the disability tax credit and the related programs. And I pledge, and Jagmeet Singh and the NDP caucus pledge, to continue to fight for a better disability tax credit system and more supports for people with disabilities, including a guaranteed livable basic income and a right to housing. So thank you so much for being on today. Thank you to Doris and Aladi for their fantastic support, as always, for this presentation. Thank you to our interpreters, Liz and Alyssa, for being terrific interpreters. Thank you. And thanks to all of you for being on this broadcast today. I wish you all the best in the coming days and weeks as we go through this pandemic. Please keep safe and healthy, and let's be kind to one another. Thanks so much. Take care. Bye-bye.